Hey, good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's marry a little technical analysis with some option analysis, give you some transparency. Where are some stocks going to move? What are we pricing in as movement going into binary events? We have some earnings that we want to take a look at. Now, the market has been to the downside, looking to recover going into the close, but right now there's four stocks that I want to take a look at. They have earnings tonight as well as tomorrow. And the four stocks that we're going to take a look at and just break down for you is going to be Best Buy, Salesforce, Dollar Tree, and Etsy. You can clearly see right now that there's some preemptive moves going on. Best Buy down 220 at 43.95. You're also seeing Dollar Tree down $3.11 at 76.44. You got a move in Etsy down 67 cents at 12.11, and the Salesforce is trading basically flat, up about 3 cents right now at 81.57. So knowing that they have earnings, seeing what the anticipation is as far as the fundamentals, taking a look at some of the peers, some big box retailers coming out. Target, the most notable one, came out, had poor earnings today, and the stock is getting hammered. They're doing basically a restructure, if you want to say, with going forward. They're going to take some. They're basically deploying a whole new model. It's a 3-year plan, and the stock is getting hit. You're seeing some big box retailers, specialty retailers getting hit. And so let's take a look. And you see Dollar Tree, the same thing. That's where everything's a buck. My kids love that store. But let's take a look at what is going on with these stocks and kind of get an idea of where they could potentially be moving. One other market that I want to touch on, though, beforehand, because there is an EIA report tomorrow. The energy information is going to be coming out at around 11 o'clock or 10:30 Eastern time tomorrow. That's going to be an inventories number. Crude right now is trading at $53.95. It's down about a nickel. It's 54 right now on the charts. But taking a look at the crude contract, this is the April contract. It's expiring in the next 16 days. You can see that it's been consolidating in a very tight range between 53.60 and basically 54.50. Very tight range right now. A breakout is going to occur in this consolidation. Right now, the crude contract for the next 16 days is pricing in the potential for either being up $2.18 or down $2.18. So you got a range basically right now between 52, which would be basically your next logical support area. That's where it started to break out late last year or mid last year, right into the election. Or it could start to challenge 56, which it just has not been able to get above since last year. Just has been challenging, cannot get above there. So we're going to watch this very closely because the president will be speaking tonight. You can see that that crude is in a range, and we'll see if there's a breakout based on any type of information that comes from his address to Congress. Just wanted to throw that one out there. Now let's take a look at Salesforce. Ticker symbol is CRM. Now when you take a look at Salesforce, you can clearly see that the stock is on an upswing with the consolidation. So you see overall up above its 20-day, up above its 50-day, and its 200-day moving average. CRM has been headline driven so far with potential merger and acquisition headlines always hitting the tape, but it's clearly been in an uptrend, and now we've been in a consolidation for the last about 10 days. You can see that it challenged today the 20-day moving average. That's short-term, potentially bearish if it breaks down below. But what are the options telling me right now in CRM? Well, if I actually tick it in here, CRM, basically take a look at the straddle strangle market. So those of you that aren't familiar, they have weeklies. So I take a look at the closest strike call and put to where the stock is trading. That would be 81.5. You take those, add those up, the offers. So 221 and 214 is the at the money strike, call and put. Then the first strikeout put, first strikeout call. Basically, you're seeing that they're pricing in the potential for around a $4 move. Specifically, that is what they're pricing into tonight's earnings announcement. That's what these options are telling you, is that there's a potential for it to move $4. Now, the stock is up 11 cents. So there's a 5% move being priced into CRM. And again, if you look at the charts, you can see that that challenge of 81, next support level comes down, long-term support, the 200-day moving average at 77, which, by the way, almost happens to be within that estimated move average, right? $4, that's $5. So very interesting how efficient these markets are. Also to the upside, obviously if you take a look back, we haven't seen Salesforce up in the $84 level since basically 2016, looking back at May of last year. So a lot of work to be done here, but in a bullish trend, we're going to watch that one real close. Taking a look at Etsy, ticker symbol ETSY. And Etsy, it has been in a very strict consolidation. As a matter of fact, if I expand this, right here, it's been basically in a range between $12 and $13.50. And as a matter of fact, it broke through and has been challenging its 20 and 50-day moving average. Today, with the move to the downside already, it has already broken that. It looks like bears are starting to take control, and that's in front of earnings. So you're starting to see some movement before the earnings even come out. Specifically, what are the options pricing in? Taking a look at this $12 stock, you can take a look at the options, ETSY, and right now, stock's trading at $12.12, down 67 cents already, or that's about 5%, 5.24% specifically. If I look at the $12.50 strike, you take the at-the-money put, the at-the-money call, you add those together, that's $1.75. Then you take the first strikeout put, which is the 10, take that off for 20 cents. First strikeout call, right, is 15 cents, so that's 35 cents plus 75 cents. You basically have a $2.10 total. Divide that by 2, that's how I come up with it. And you basically have a $1.05 move being priced in. And there's a little bit more, if you look at the implied volatility, it's about $1.77 that's being priced in going into this event just tonight. A $1.77 move in a $12 stock would basically be about a 10% move. It's already moved half that amount right now, over half that amount, or a little under half that amount that's being priced in for potential movement. Does it have to move within that range? No. But again, you're looking at this, and if, as a matter of fact, if I display the Greeks, if it did move $1.77, which means about another $1.10 to the downside or upside, you basically only have about if you look at the delta, about a 13% probability of being down at or below 10, or a 14% or 13% probability of being above 15 by the end of March, so, or the middle of March. So the bottom line is that it's a low probability that it occur, but earnings are unusual binary events. There are circumstances that we just don't know what could potentially happen. So knowing these price action, understanding where it's been, and now understanding where the pricing is potentially pricing in, where it could be, now you are going to have some transparency. As a matter of fact, last night when we were talking about Priceline, we saw that it was pricing in the potential going into earnings of a $62 move. The stock moved $100. All right, so knowing that it could move as much as $60 and could go even beyond that, guess what? That allows you then to set up a trade and manage a current position. As a matter of fact, I was working with somebody where they were worried about the upside. They had a bearish position on. They were concerned about the upside. We talked through some strategic approaches so that they could hedge the upside in case the stock went up considerably, and if it broke down, they were fine. And you know what? They were happy they did it, because basically with the $100 move and being bearish or short Priceline, they were covered almost to 100%. All right, now take a look at Best Buy, BBY. Best Buy is announcing after hours. You can take a look at the chart right now, mixed at best. It's very, very consolidated over the last couple of months, 46 to basically 44. That's where we're looking at support. And as a matter of fact, I like to look at the bars, and you can see right now it's right on support. It broke the 20 and 50-day moving average. It did that today, and it did it in the past, but it was settling right above. So mixed action here in Best Buy. The stock is already down 2 and some change. And as a matter of fact, if we take a look at the Best Buy options, they're actually pricing in the potential, and I'm going to put in BBY. They're pricing in the potential, just looking at the straddle strangle market, of the stock basically being either up or down $3 and roughly around 69 cents. Again, look at the at-the-money strike, which is 44. Stock's trading at 44. So you take the at-the-money call, the at-the-money put, right? So for math's sake, we'll just round up. So basically it's $4. Then the first strike out put, $43.50. First strike out of the money strike call, $1.83. So basically you're seeing that it's pricing in the potential, if you add all those up and divide that by 2, of almost a $4 move, specifically a $3.69 move. It's already moved almost over 2/3 of that. So it's pricing in a little over a 7% move. It's already moved to the downside. Could the stock bounce after hours? Of course, if their earnings and guidance and so forth are good, but the stock's already in the move to the downside, you want to keep an eye on that. And looking that it already had broken through its 50 and 200-day moving average and the potential for it to even drop or rise even more, you're looking at the next support level, which would be right around the $42 mark. That's where you saw stock trade and where it previously had gapped up. And you're looking at long-term support right around that $38.50 level. That's the 200-day moving average. Now, finally, we want to take a look at Dollar Tree. DLTR, taking a look at the charts right now, Dollar Tree is basically broken its 20 and 50-day moving average. Stock is now trading to the downside, under pressure. Could be in sympathy already because they saw the target earnings. Same thing with Best Buy. But if you put in DLTR, let's see what the options are telling you. If you just looked at that chart, it would just say, okay, it's negative, the stock's going down. This isn't good. But what were the options pricing in as far as potential moves? Now you can see that they have weeklies. So this is the closest expiration cycle. This is the March 3rd expiration. So that will be this Friday. Again, stock trading at 76.65. I'll take a look at you can either I'd look at the 77 strike level. That would be the closest strike to being at the money. So again, what do? You take the at the money put offer, at the money call offer. So basically that's going to be a little over $6. Then the next strike out put, out of the money put, 285. Next out of the money strike call, the 78s at 250. So basically you are sitting here looking at right around a $9, around a $4.50 move, $5 move. And as a matter of fact, if you look at this, it's about $5.50. The stock is already down $3 or 3.66%. So it's almost moved 2/3 its estimated move right now. And so with the stock already down 3.66%, it's still pricing in the potential for another about 1.5% to 2% of movement going into earnings. And again, does this mean that that estimated move is to the downside because of the fact that the stock is going to the downside? No. These estimated moves I give you are forecasts that are non-directionally biased. You will determine your bias. Now you can use some technical and fundamental analysis to do that. And right now, you can see that the price action is dictating or giving us some information that says that the bears have been in control, but it has been in consolidative action between 75 and 81. So it's had a $6 range for most of 2017. With that being said, we'll watch the stock closely, and we see going into the event and the end of this week that this stock could still is priced in another $1.50 to $2 of potential movement, either to the upside or downside, but we're staying within that range. All right, folks, that's it for Tech Talk, where we gave you some information on stocks that are going to have earnings. We're going to watch these very closely tonight and tomorrow, and we're going to see what the president has to say tonight in his address to Congress. That's going to move the markets potentially. And so join us at 4:30 Eastern Time this afternoon. We'll take a look at all the overlying market action, and we'll give you some ideas of what could potentially be moving after hours and while the president's speaking tonight. We'll see you at 4:30 Eastern Time here at MarketStream.live. Thanks and have a great trading day.